Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, January 6, 2023. I'm here with Shaun Burgess, Fixed Income Portfolio Manager. You all know Shaun and have seen him on these videos previously. Shaun, in terms of what we saw this week, a lot of what we've seen the last month, and that's intraday volatility. But when we look at prices over averages and indices, flattish, but a lot of intraday action, both in fixed income and equities. In terms of what you saw this week, you had all sorts of Fed interviews, and you had a jobs report. You had interest rates with a ton of volatility. Look at the 10-year today.
Yeah, the move this week has been tremendous.
You know, that drawdown on the 10-year interest rates today really caught my eye. Yeah. What are some of your thoughts?
Yeah, I mean, just to point to that, you're down 30 basis points on the 10-year on the week, which is a huge move as far as the 10-year goes. So, a lot of those releases we saw, the jobs numbers came in very healthy, very hot. Not something the Fed probably wants to see, but, can paint a picture toward more a softer landing, which the market may like, which the equity side of the market may like. You had average hourly earnings coming in lower, which the Fed probably wanted to see. That was a good figure there. And ISM manufacturing numbers came out that pointed to some weakness, which leads you to believe the Fed may be on the end of their aggressive hiking cycle here. And maybe that's what the bond market saw with some of the action we saw. We were talking about it earlier, and not only might have you had some short covering or some position covering there, maybe the bond market's telling you the Fed is on the tail end of their aggressive cycle here.
Speaking with Moose the other day on the video, we talked about maybe a lot of the heavy lifting's already been done by the Fed. I think that's fair to say, because you're not going to go on the 10-year or even on the Fed funds rate, you're not going to see the same pace of rates, or else we're really in trouble.
Yeah, and we've got a very important CPI number coming out next week. One number alone, and you've said this before, doesn't tell you an awful lot. You need to see those numbers put together. You need to see market action with some time attached to it.
Right.
And you know what? We're going to get a very important CPI number next week. Market's going to really be looking at that to possibly get an idea of what the Fed's going to be doing here. We do know they've said they're going to continue to hike to get inflation down to 2%. But the question is, what's the pace of it going to look like going forward?
It's the pace within those hikes, right? And you mentioned, Shaun, positioning. And all of our viewers have heard me talk about positioning over and over and over for the last 3 years. Take today, equity market very strong, and interest rates falling, bond prices running like a banshee. This was due primarily to how the markets were positioned going into that job report today. Obviously, we have many multiples of bets being placed in the Treasury market versus what we've seen the last 3, 4, 5 years. So that kind of action in the fixed income markets, we haven't really seen since 08, 09 in terms of intraday. And we see the same thing in the equity markets. Some other things I have my eye on. Let's pop up this chart here. Look at the action in the commodities market within natural gas and oil. This is real impressive in terms of supply coming into this market. We talked about that back when Russia invaded Ukraine. We went to 95, 100, 110, 120 in West Texas crude. And people started talking about 150 and 200, forgetting that the old rule in commodities is what cures higher prices? High prices, higher prices.
Higher prices.
Yep. When you see those kind of prices, the companies start pumping and drilling as much as they can. They have to take advantage of those prices, regardless of what they say, right? So you can't, an oil company can't sit in front of their board and say, prices were $100 a barrel, but we decided not to drill.
Nope.
So
worried about their bottom line.
We often try to discount what people are saying and watch what they're doing. And when we saw those rigs start to accelerate, you knew that some supply would come on. So we'll keep an eye on that. In terms of what we're seeing day to day, what we liked this week was the continued bid in the value area. We picked up a bid today in growth. It would have been nice. You can't have everything, right? It was a nice up day. If I had my druthers, if I had the perfect trading, I would have seen a little bit of a pullback in the defensive equities. We didn't. You know, sometimes we look at multiple markets to get an idea. And if you were going to see some real risk come into the market, you would have liked to see some selling in utilities, in staples, in some of the areas where people have been defensive. We really didn't. They kept pace with growth today.
Seems like everything caught a bid today.
That was the positioning. So we're not going to look too much into it. We still have our cash position. In terms of action this week, we had a small buy in the international portfolio. We added to India. Last week, I talked about our cash position. I said we were sitting chilly, and we got some nice responses from some of our friends in terms of my question was, does anyone know what that term means and where does it come from? And it comes from horse racing. It comes from a jockey that's sitting on a horse who's loaded. And what I mean by that, and if you're a handicapper, you love to hear the announcer say, your jockey is sitting chilly because your horse hasn't even been asked to move yet. Your jockey is very patient. And that's how I feel we're sitting in terms of some of our cash positions within our equity portfolios. Hasn't hurt us yet. As we trade, different sectors, different industries will present opportunities. Try to keep away from getting into the conversation of, has the market bottomed? Is it a bull or a bear? Are interest rates going higher or lower? Those questions are too broad, and nobody knows the answer to them perfectly. The real answer is some sectors have bottomed.
Yep.
Some sectors haven't. Some stocks have some headaches ahead of them. Some we'll be talking about are 40% higher next year than they are today. It's trying to get to those valuations that make sense, control the risk, and let the market do the work for us.
Well said.
So don't forget to like, comment, and subscribe. We're with you every Friday, and also with any kind of special reports when there's some action that needs to be discussed intra-week. So enjoy the weekend. We'll see you next week. Happy New Year.